Now, I'm about to share with you a trading strategy that is going to blow up your mind. Now, this is so easy that even a 5-year toddler can actually use it to get trades and kill it so big. Now, without any further waste of your time, I'm going to dive straight into the charts, show you how it goes, and we shall also try it out with other trades and actually see how it works, because I've actually been using the same trading strategy for like the past 3 weeks, getting killer trades, sharing them in the Telegram channel. You can actually join it. Now let's dive straight into it. The first step is getting 2 bigger time frames. Now the bigger time frame that I would recommend is the H4, assuming you are a day trader. If you do swing trading, you can even go as far as the monthly or the weekly, but to a day trader, the bigger time frame is going to be the H4. So we are on H4 and we are currently on Euro AUD. Now the other thing that you have to look out for is what's the overall trend. Obviously it could just be an uptrend or a downtrend, but remember, in an uptrend we expect series of higher highs, lower lows, higher highs, lower lows, higher highs, just like that. And either way, in a downtrend we expect a series of lower lows, lower highs, and that's easy. This is so easy to find on the charts. So an example right in here on Euro AUD, we have an uptrend. Now it's so easy that we can clearly see we have a trend to the upside. Okay, now the other thing that we are going to do next is mark out the most recent key levels. Okay, now we are going to you can either use your rectangle tool or horizontal lines. So let's go ahead and mark out this. So we have a point here and I'm just going to stretch it up to this one. I'm just pointing out at this point here, and again we can also draw down one right around here. There we go. So mainly what I'm trying to focus on is the overall market direction, and then we shall also consider the volume, because at the end of the day we shall also see how are the candlesticks behaving. Well, if it was an uptrend, could we expect a reversal at any point? Just like that. So there we go. Now on Euro AUD H4 we now have 2 points. So we have this level up here, and then we also have this one down here. Now what happens next? So after seeing this, obviously we can see that the price came from here, pushed up to this level here, and it's coming back down. Now what I want you guys to remember is, obviously if it's an uptrend like how we established in the first place, we would expect the price to keep pushing and breaking the higher highs, meaning in such an example we expected the price to at least just break above this level here for us to form the next higher high, maybe right around here. Let me just illustrate it here. Right around here, right? Because, well, if it's an uptrend, we expect the price to keep pushing, and that didn't happen. So what does that imply? It brings us that, well, something like a reversal could be happening, because obviously just like how the price is pushing up, let me show you real quick here. Obviously if the price is pushing up, it's going to push, and then instead of breaking this previous level, it could just stop right around here. So this could mean that a reversal could be coming through. Now what happens on a reversal? Obviously we can see chart patterns, just like it can be a head and shoulders, just like that, and then we see a reversal. Or we can also see a double top. You can see a pattern just like a double top. Okay, and then boom, right? So basically in this case would be just looking out for these levels here. Okay, these levels here, we call that the neckline. So having seen this, now obviously because the price hasn't broken above this previous level here, let me just draw it so you guys can see it clearly. This being a level right around here, and we're expecting the price to break above. It hasn't happened. So that could bring us that, well, a reversal could be happening. And guess what happened? We can see some changes here. So the next thing that we are going to do is we are just going to scale down to a smaller time frame. So remember we started from H4. Now the next time frame can be the H1. All right, so let's do that. Now we come to the H1. And then there we go. Now on the H1, we can also go ahead and mark out any other key levels. So in this example, you just have to look out for the most recent levels that have been respected. You can call them your support or resistance levels. Some other people can call them supply and demand, but it depends on what you decide on. So you can again go ahead and mark out the most recent levels. So an example here, we're just going to mark out this point here. Why? Because Why? Because the price came out here. Let me show you. Because the price came out to this point and then it bounced off. Same thing again happened right around here and then it bounced off. So guess what? We could expect obviously the price bouncing off, because remember, once it happens once or twice, it could actually happen the other time. Again, on the other side, remember again, we were seeing some reaction off from the other side. So we are not going to conclude that, well, it's time to take a buy or sell. No, it's about waiting and patience. So let's go back and see now what's happening. Now, obviously, we do have a double top. Let me just show you this, guys, very well. Oops, sorry. And then we can just make this red so you guys can see it clearly. Now we do have a double top, this being a first one, and then we also have this one here. So like I said, remember when we have a formation of a double top, that could show us that maybe a reversal is happening. Now guess what happens? Obviously we see the price come here and then push down and then come back for some sort of a pullback, and then we see the price pushing down. Now remember, these levels, obviously we expect these levels to get broken later on. So in this case we have to draw out this level. It's called the neckline. Price is going to push up, come down, push up, and every time these levels are broken, we are going to expect a retest. So it's the same thing that happened here. Obviously, let me go ahead and delete some of these so we are not confused. There we go. So what are we seeing now? So we have two levels forming a double top, and then we also have this level here. Obviously, remember we have a point that we had marked out here. So in this point, we are not going to rush to take a trade. And guess what? I'm just going to have to wait because this is a real time. Obviously, I could decide to take sales if this level gets broken. Because it has been respected already. This level gets broken, seeing an impulsive push through this point, I'll decide and take the sell. I'm not going to rush because the point had been respected multiple times already. So we're just going to watch out for, at any point, if this level is broken, we shall just take a short-term sell right around here, and then we shall have a take profit of about 1 to 2, and then we can decide to place a stop loss just above the closure of the candlestick. Well, the best way of placing a stop loss could be placing it above a key level. If let's say it was a support or resistance level, you can decide to place your stop loss right around there. Well, it's a bit safe because if the price had respected that place, more often if it's broken, then your trading is invalid. But in this point, this is going to be a stop loss right around here, because we watch out for this candlestick breaking through. So we have not yet taken the trade. We are just going to come back after a couple of minutes and then we shall have a trade in. So a quick recap right here before we go to the next pair. We said we are going to start from bigger time frames. It can be the H4 or the daily, but for day traders, the best and recommended time frame is the H4. And then after that, you are going to establish the overall trend. It can be an uptrend or a downtrend. Obviously, in an uptrend, we expect a series of higher highs and then higher lows. And then in the downtrend, we expect a series of lower lows and lower highs. Then after that, we are obviously going to look out for the most recent key levels. And that's what we are doing. So let's go ahead and try out a different pair. So we can try out GBP USD. We had CPI today and we took a very, very beautiful trade here. Let me show you guys real quick on Telegram. We took this beautiful trade right around here. There we go. So we caught this beautiful trade. I'm just going to put the link to my Telegram just down there so you guys can kill it with me. It was a very good one. Anyways, let's go back to it. Now, the first thing that we are going to look out for GBP USD, obviously we have to go to bigger time frames. First, H4, and then there we go. Alright, what's the overall trend in this case? It's obviously an uptrend. I had marked it out already. So it's an uptrend. Why? Because we expected to see a series of higher highs, higher lows, higher highs, higher lows, and now we have a higher high. Now, one thing that I want you guys to understand is, obviously, every time there is a push phase, we expect a pullback. Every time we have a push phase, you just have to see the volume. We must expect a pullback because we have some exhaustion right around here, and then we are going to have a pullback and then more momentum and then a push. Let me illustrate that way better. There we go. So these points here and then these points here. Let me log this first. These points here and then these points here. So what happens is at this point, obviously every time we have a push phase, we are going to expect some exhaustion here, and then we shall pull back down to this point here. So basically we have exhaustion. So we have exhaustion. Let me just increase this so you guys can see it clearly. And then we also have these points here, momentum. Now at the point of momentum, more traders are coming in. So at the point of momentum, it's when the pullback is ending and more traders are scaling in positions and all that. So the market is going to push up with a very, very big momentum. Same thing for a downtrend, is just the opposite. Now let's go back to GBP USD and then see what was happening. So obviously by looking at it, it's an uptrend. Okay, we have a beautiful uptrend. There we go. And now what do we have to mark out? We just have to look at for the most recent key levels. Now we are going to mark out this. We have this point here, and then we can also have this one here. Okay, let me just delete this. So now we have two levels. We have this. Let me go ahead and just show you. So we have this point here. Okay, then we also have this. Okay, so after marking out those levels, now what's next? Now we need to see how does the price play around these levels. Obviously, them being key levels, we have to see some market reaction. It's either going to be respected, or if it's broken, we should expect some sort of a retest, and boom, we are in. So obviously, since it was an uptrend, what happens? So we see the price pushing. We see the price pushing off here. Okay, there we go. Small pullback, push phase. Reaching this level, we expect a pullback. Now obviously I know you could be wondering that, well, since this point had been respected, we'd have taken a trade, and yeah, true. But since this level had been respected a couple of times, 1, 2, and now this being the third time, you could have taken a sell right around here with just a stop loss somewhere around here with a take profit of about 1 to 2. And yeah, it could have worked out because remember, we on the H4, it's a bigger time frame already, but then after with a big push phase. So we actually took the same trade and it worked out. So you can always mark out for the reactions at those levels. But again, remember, since it was an uptrend, this level was to be broken. And guess what? We saw a very big bullish candlestick. This implies a large volume. We had a big volume right here with this big blue candlestick. And now when you try to scale down on H1, our level was broken with a very big momentum. So what we expected was, because this being a key level, we expected the price to push up and then come back for a retest at this level, and then we would take a trade. So in this case, we wouldn't have taken a trade. We miss out on that because in any case, when these levels are broken, we should expect a retest, and that's how we get trades. It's not a good idea to chase a trade, or because this is happening, or because there's a push phase already, let me get in and get that trade on. No. Okay, so basically in this trading strategy, we are just considering the overall trend and then the volume, and then most importantly, the reaction at key levels. So it's just so easy. Just look out for the overall market trend. If it's an uptrend, there we go. Oops, sorry. If it's an uptrend, boom, 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 boom. Just mark out these levels here. See the most recent levels and just wait for the overall reaction. At some point, these levels are going to be respected. Just like in this case, we could expect price coming back here and then bouncing off just that way. Okay, and that's how we get trades. You can keep scaling down to smaller time frames, up to maybe the M15, because that's why it's easier to get trades, but you can just keep repeating the same procedures over and over again. And that's it for today's video, so please consider smashing that subscribe button. I'm going to be doing more of these because I've actually not been doing these videos, but I'm going to bring out more. And if you want to join my mentorship, you can check the link down there. We have a bootcamp coming up, and let me see you in the next video. I'm out.